So we got 2 weeks of earnings in this presentation. It might be a little long, I'm sorry, just bear with me, guys. I'm gonna talk quick, straight to the point, boom, boom. These are good companies, big companies. You should know about this shit, you know? Unitedhealth Group. It's a great company, probably my favorite one in the health sector. Now, as you can see with all this green, they beat expectations in EPS. They beat that too for year over year. Last quarter, they beat expectations too. Revenue, they beat expectations. Boom, year over year, it's on an increase. And they're beating the market too for year to date. While it's up 6%, while the S&P is down 7%. Well, this little chart over here showing that in the stochastic, right over here, it's a little bit overbought right now, but that's expected for like the circumstances of the economy. So, long term, Unitedhealth Group can't go wrong. Delta Airlines. Now, for like airline companies, hospitality companies, all that, everybody knows because of COVID. Boom, this chart just shows it has not recovered. But most stuff is overvalued right now. This one is probably undervalued, and this is my favorite company in the airline industry. But the earnings wasn't that great. They missed expectations in EPS. They beat expectations in revenue, though, so that's good. And they're expected that the next quarter, that the revenue is going to be right back on track to before COVID. Basically, not 100%, but basically there. Now, for like the year, Delta's down 20%, while the S&P's up 6%. So, yeah, it's underperforming like shit, but it's expected. Morgan Stanley. This is a lot of people's favorite investment firm. And they showed some good numbers. Now they beat expectations in EPS by over 20%. That's pretty good. That's great. Now last quarter they did the same shit too, and they beat expectations in revenue. But the only issue was they're down year over year for EPS and revenue. But that's really like the whole industry, and they're down 14%, like compared to the S&P's down 6%. But that's really the whole industry as well. Morgan Stanley got good numbers. And as you can see, the stochastic boom over here is showing that it is oversold. Now Goldman Sachs, same thing basically. Beat expectations in EPS. That's a 25% surprise. These companies just killing shit. But year over year, it was at a loss. Last quarter, they didn't even meet expectations. Boom, revenue. It beat expectations by 15% basically, but year over year still it's no increase. It was down, actually decrease. Year to date, it's down 15% compared to the S&P 6, so it's underperforming. But like I said, it's the whole industry. Morgan Stanley though, is better option, my bad. JPMorgan is like a bigger one though, bigger company. Same field though, type shit. EPS didn't meet expectations. Year over year too, it's down like over 40%, but yeah, as it's down. Net interest margins, it exceeded expectations, so that's good, as well as revenues did, but that's down year over year too. Well, this is just the whole industry really. It's down 13%, while S&P is down 6%. Wells Fargo. Now here's like the banks. Got beat expectations in EPS. That was an 8% increase, like surprise really from expectations. Year over year though, it is down. Last quarter beat expectations by 26%, got down. Revenue though did not meet expectations, so that's not a good sign. And then year over year too, it's also down, but it's outperforming the market. It's probably because it has been undervalued like shit for a while, so it hasn't even recovered from 2008. Just like Citigroup over here, but they beat expectations in EPS by a nice chunk, just like Wells Fargo, 16%. Year over year though, just like Wells Fargo, all those investment firms, it is down. Finance is just not how it was last year. Last quarter though, beat expectations. Revenue beat expectations. Prior year, just like all the others, it is down. And then year to date, it is down 17%. That's bigger than but damn. No finance companies. There's something like a Charles Schwab. It's only down 1%, while S&P is down like 8%. But for this earnings report, they didn't meet any expectations. Their stock too, it responded to this terribly and was down big after these numbers. Now the bank, everybody talking about, everybody investing in Bank of America. So if you want to be in a bank, other than TD, really, in my opinion, Bank of America. They beat expectations in EPS. Last quarter did the same shit. That's good, consistent shit. I like it. Revenue, it also beat what's it called expectations. And for year over year, it actually showed a growth, unlike most of these other like the competitors. But not for EPS, it didn't. But it's around the same thing. Now, as you can see, stochastic, it's oversold. Boom, like the whole industry right now. And Bank of America got great numbers, got Buffett in it, Charlie Munger, everybody is in this company. If you want to be in a bank with interest rates too going up, that's the one to be in. Lockheed Martin. Now everybody in this because of Russia's crazy ass and just a warfare hedge. Got a little video on that if y'all want to learn too. Put that shit right down here or something. But no, alright. They barely recovered because of COVID, as you can see in this chart. It's a little bit overbought though right now. It shows stochastics on our side, but that's because of the circumstances of the world. But they showed some good earnings. EPS is up. I mean, it's better than expected, but down for the year. People are just buying guns out the ass during COVID times, so why not? Last quarter though, they beat expectations too. Revenue beat expectations, but year over year it's just down. It was just a crazy economy we was living in last year. They're up 31% year to date while the S&P is down. So like that's just outperforming out the ass. That's Lockheed. Now Abbott, this is a nice little health company to be into. Decent dividend. They beat expectations and everything. They did the same shit last quarter too. Not only did they just beat expectations, but they do it in double digits. Like look at that, 17% for this quarter. It was 10% last quarter. It was basically a 7. Like it was almost 10% in revenue too. And they're year over year too. They're growing. But damn, for the year they are down 14% while the S&P's down 6%. So. Technical analysis looking decent for them too, but it's a lot of good health companies to be out there, and health companies, they might have seen their time. IBM is a little tech company, nice dividend. EPS beat expectations, but it's down year over year. Last quarter they didn't even meet expectations. Revenue beat expectations, but it's down year over year. It's around the same for like their price year to date compared to the market. It's alright company, you know. Johnson & Johnson is a great little company to be in times like this, and they're doing little management, they're changing up the company, splitting it up and stuff. Earnings was great right here. They only missed in their revenue though, so that's not a great sign, but they're showing a growth from the year prior, and year to date they're outperforming the market. That's what I like to say, you know. It's a stable company, recession proof. Just like Procter and Gamble over here. It's a lot of green too. They beat expectations and everything. EPS, last quarter they did the same shit. Revenue, beat expectation. Everything up for year over year. But it's underperforming year to date. Actually compared to Johnson & Johnson, down 2%. But it's beating the market, which is down like 6%. Got Crown Castle. We got a lot of dividend stocks over here, you know? They beat expectations, and that's considered their EPS basically, the FFO. Last quarter they did the same shit, beat expectations too by like 4% for both quarters. Revenue beat expectations, year over year they're growing. Boom, they're down though, same as the market basically. But RSI is showing that it's a little bit overbought too as well right now. Like Enya is might go down a little bit more, but stable little company, even in rough times. So Tesla. Alright, Tesla. It's another company. This shit was just up, and it's gonna go down now. Even Bill Gates saying this shit gonna happen. What's it called? Elon Musk, man, this shit. Day over. Come on, look at this. Stochastic isn't as overbought as I expected, but it is bound to go down. You can see like the resistance level, support level easily to build in this shit. But let's get to it. Tesla EPS beat expectation. That's over 200% increase year over year. Revenue beat expectation. That's over 80% increase year over year. So this is a good growth company and it's proven itself. But vehicle production did not meet expectations. So come on, Elon, what's up, man? But for the year, it's up 35%, while the S&P is only around 7%. So Tesla obviously overperforming like shit. But hey, when shit's gonna go down, it's probably gonna go down at a higher rate. Now, down here, Danaher, however the fuck. It's another great health company. Fucks with them heavy. Earnings was great too. Look at all that green. EPS beat expectations and it's up year over year. Last quarter beat expectations too, so they consistent. Revenue, boom, beat expectations, and it showed a little growth for year over year. But it's down 14% year to date, while the S&P's down 6%. So yeah, but health companies were up a whole lot last 2 years. It showed too. Abbott's has the same pattern too, basically. So it's expected. No worries. Great company stuff. Nextera Energy company. Good dividend, really good dividend. Everybody loves the dividend. Now EPS beat expectations by 300%. Goddamn! But year over year, it didn't show any growth. Last quarter didn't meet expectations, and it was a miss of over 100%. So this company just boom, 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 boom. Damn. Now revenue, it showed a year over year growth, but it didn't hit expectations. Missed by 10%. So come on, man. But year to date, it's down 11%, while S&P is down 6%. Dividend is tough though. Union Pacific, little railroad company. It's a great company, recession proof. Time like this, I would be in a company like this. Earnings too. It's the numbers I like to see. All that green. Look at that. Beat expectations in EPS, revenue. Last quarter did the same shit. And year-over-year growth in all the categories. And it's outperforming the market, even though it's down 1-2% for the year. But the future looks bright for this company. And look at that. Stochastic shows it is oversold like shit. And it's outperforming the market. Now, Tractor Supply is another company people expect to be doing good during times like this. Now, during COVID, look at that too. They're striving, and it's justified too. It hasn't been getting corrected like all those other companies that went out for no reason, EPS beat expectation, showed growth year over year. Last quarter did the same shit. Not just last quarter, 4 quarters straight. They made sure that boom, they was beating expectations. Revenue too, beat expectations, showed growth year over year. While the S&P is down around 6% year to date, the Tractor Supply is down 7%. But could be a discount for this company,